Today's conversation is a good one. We're going to focus on the business case for ESG, the role of accountants and accounting firms, the urgency to take action, and also bring up some educational resources for executive leadership. As with the rest of the series, the format of our session today will be a 20-minute discussion followed by an audience Q&A. During the Q&A portion, we'll answer questions submitted during registration for this event, as well as those submitted in the Q&A window during today's live session. My name is Paul Preziotti, and I'm a partner with Johnson Lambert. A little bit about our firm. We're a national CPA firm that serves the nonprofit, insurance, and employee benefit plan industries, and we provide audit, tax, and other assurance services. I'm thrilled to be joined today by Julien Gervreau. Julien, would you like to give the audience a little bit of context about who you are?
Hello. Yes, thank you. Thanks for having me. I'm Julien Gervreau. I'm a director in the ESG and sustainability services practice with Sensiba LLP. We are a tax audit and accounting firm that has been in business for over 40 years, based primarily in the Bay Area, but we have employees and clients now all over the country. We do, in addition to audit and assurance, tax and consulting work, we have increasingly expanded our services to focus on sustainability and what are known as ESG, or environmental, social, and governance. Prior to joining Sensiba, I worked primarily within industry. Most recently, I was the head of sustainability for a large privately held wine company in Northern California, and I am very happy to be here today.
Thanks, Julien. To kick off our discussion, let's go to our first polling question. How likely are you to prioritize sustainability initiatives within your company's strategic planning? And if you want to go ahead and submit your response, this will help us to tailor to the discussion. Julien, any guesses or thoughts as to where we're going to end up here?
I mean, my thought would be, if people are on this webinar, they're somewhat interested and at least somewhat likely. So we'll see where we land.
Excellent. Okay, we'll just give everybody a couple of more minutes to respond. Okay, get those responses in. All right. So somewhat likely is our answer. And, that's probably what I thought as well. ESG is a topic I think that everyone's heard about from the sense of it being discussed in the various communities they're a part of. But, maybe you don't have that knowledge. And I think that segues nicely into this. So this slide says it best. Julien, what are we thinking about ESG, and why is it important for individuals to consider it for their businesses?
So, as I mentioned, ESG, it's essentially kind of derived from the concept of triple bottom line sustainability, where organizations evaluate the impact of people, planet, and profit on their financial considerations ultimately. And I think ESG specifically is really more of an investor-led framework, and it's essentially historically used to measure risk for a business of certain environmental, social, and governance issues, policies, practices, and procedures. And increasingly, it's also aligned with how companies perform on those issues as well. I think big picture, sustainability in general and ESG specifically are increasingly relevant right now for companies for demonstrating transparency, responding to stakeholder inquiries, and really, from an industry perspective, some of these standards and these measurements that look at a company's sustainability efforts, they allow for apples to apples comparisons. And in the same way that, we see, the importance of standardized frameworks for measuring an organization's financials, we're now seeing that maturity happening on the sustainability or the ESG front.
And is it fair to say too that it's becoming synonymous with good business practices? What are your thoughts on that?
Yeah, 100%. And I've spent the vast majority of my career evaluating the impact of sustainability on business and vice versa, kind of looking at how better businesses kind of integrate sustainability principles to make themselves, what I say, leaner, greener, meaner, and more efficient. And I think that in today's day and age where there is such a degree of transparency, particularly, obviously in the public markets, but increasingly in the private markets, transparency is a critical tool. And the more organizations are able to demonstrate sustainable leadership on everything from climate change disclosures to how they're treating employees and their communities, it really it's a net benefit for all.
All right, so we know it's a part of best practices. From the standpoint of a business, can you give our audience a little bit of context about what some of the benefits of buy-in are?
Sure. So, I think one of the areas where I had a lot of success earlier in my career kind of gets into the issue of materiality at a very high level. And so what sustainability frameworks look at is helping to identify organizational and industry specific material issues, those that have an impact both on the financial bottom line of the organization and also, fall under one of those environmental, social, or governance criteria. And working in the wine industry, for example, which is obviously an agriculture-based industry in a semi-arid environment in California, water pretty strongly hit that materiality threshold for us in the wine business. And between 2012 and about 2020 or so, California, most of the state of California was gripped by a pretty significant drought. And we looked at that as an opportunity at the wine company to evaluate and lean into water conservation and reuse. And so we did a lot of baselining to understand, not just how much water we were using to produce a gallon of wine or to grow an acre of vineyard, but also we were looking at the cost implications associated with using it. And that is, I think, where we started to see some real movement in terms of our executive teams and our ownerships group embrace of really kind of looking at water conservation as a core business strategy. So when we ultimately priced out how much it cost us to use a gallon of water in our wineries, for example, we had to factor in what's known as the true cost of using those water resources. So looking at everything from the treatment costs to bring that groundwater, which is where we were primarily getting our water from, to bringing groundwater up to potable usage so we could use it in the winery, the electricity associated with pumping it out of the ground, the natural gas used to heat water, more electricity to pump it around, more electricity on the back end to treat it before you could dispose of it. All of those things had very real hard costs. And so at the end of the day, when we factored everything in, we recognized that every gallon of water to use, and this is water that we had considered free initially because we pumped it out of the ground and Mother Nature didn't send us a bill, but every gallon of water actually cost us about 3.5, almost 4 cents a gallon to use. So when you put that into context, 1 million gallons of water is $35,000. And so then you can start to justify saving, conservation initiatives and investments in saving that water through everything from, water recycling to rainwater capture and things like that. I think the other side of that coin is thinking about, water specifically. For us at the time, we really looked at water conservation somewhat as an insurance hedge. So, in the face of mandatory water restrictions throughout the state of California, we're requiring companies to cut water usage in some cases, over 20%. And by demonstrating baseline and that we were showing kind of a more conservative baseline than the industry average, we actually were able to avoid some of those mandatory restrictions. And when you think about, the water required to, in the production process for wine anyway, water water curtailment essentially meant that a lot of companies had to make less wine, which had a direct impact on revenue, obviously. So kind of thinking about it kind of on both sides of those coins is one of those examples where I feel like sustainability and good business just go hand in hand.
Yeah, one thing you said, Mother Nature hasn't sent us a bill yet. I might argue that bill has come through floods and fires, but who could say? But the other thing that comes to mind as well when I think about this, right? You talk about the costs, and investors and donors come to mind. That's certainly something to consider here, right?
Yeah, absolutely. So what's happened over the last few years is this harmonization of global sustainability reporting standards. There's an organization called the ISSB, the International Sustainability Standards Board, and they were created by IFRS a few years back, and they have now established kind of a global baseline for sustainability reporting that aligns with industry, and it aligns its industry and sector specific. So there are basically right now there's about 77 different reporting standards depending on where a company falls within the broader economy that help leaders of businesses understand those material issues that I described earlier. So kind of helping that harmonization. An organization like the International Sustainability Standards Boards and the frameworks that they've established for reporting are critically important. And I think we're increasingly seeing that smart money is asking for disclosures on sustainability risks and opportunities, and we're certainly seeing that in the investor space. And having those standardized frameworks really helps people evaluate investments appropriately using that triple bottom line framework.
Yeah, and I think that's a good thing for the audience to know, right? There's not one way to look at this. There's multiple standpoints that you have to consider when thinking about the world of ESG.
Absolutely.
All right.
Materiality.
Well, I think we're ready for our next polling question here. Would you be open to collaborating with external partners or consultants to implement sustainability? Julien, while our audience is responding to this question, any thoughts on this from your perspective, being in the industry for so long?
One of the biggest challenges that I was faced. So I've been doing this now for nearly 20 years, and what I've seen is the number of companies that have somebody within the organization who has a dedicated non-compliant sustainability role. That number of that's grown pretty exponentially. We've seen a pretty dramatic increase in like chief sustainability officer type roles who are looking to the future and trying to align business and sustainability and think about long-term resiliency. And I think that one of the challenges that I was always faced with in my role, because you're chronically understaffed and overwhelmed in terms of the roles and the responsibilities that you're being asked to do, because generally speaking, anything that had the word sustainability in it would land on my desk. So being able to tap into subject matter experts is really important for helping us all along the profession, in the same way it is across any other aspect of business.
Yeah, get experts to help you out. That's something I learned very early on in my career, and I still use to this day. Okay, yeah, so we definitely got some folks who are interested, which is good to know. Again, for all the reasons Julien said, it might be something to consider. Okay, the role of accounting firms in ESG initiatives. I would imagine there's a fair amount of people who are CPAs and/or work in the accounting industry on this webinar. What do we think, Julien?
I mean, I think at the heart, the accounting profession is really, I think, making pretty good strides into the sustainability services space. Excuse me. And I think that's, really, I think, driven and predicated on the fact that there is this growing understanding and recognition that sustainability risk is financial risk. And as such, it needs to be measured and it needs to be reported in line with a company's financial statements. That's really what these global sustainability reporting frameworks are all about. And, my personal journey moving from within industry to working for an accounting firm was really, in my mind, an opportunity to expand my impact and to take what I had learned over the course of the first half of my career and to be able to consult with other organizations in like a fractional chief sustainability officer type role where I'm helping them integrate sustainability into their core business strategies. And when I was thinking about where I wanted to go next, working within accounting, it sounded so glorious to me. I had to dive in. But one of the things I think where we're seeing some real movement and some where the conversations, where the light bulb tends to go off for senior executives is in our financial statement audit process, where we're asking questions, and we are kind of going through questions in that process, and we start to integrate sustainability and climate related risk questions to help them essentially understand, like I said, that sustainability risk is climate risk, and that if they don't at a minimum have awareness of what their risks and their opportunities are related to sustainability, related to climate, that they're at risk right there. So helping kind of provide that level of accountability, credibility, I think, for sustainability is where the accounting profession, I think, has a great opportunity to advance sustainability objectives globally.
Yeah, and I think everyone on this webinar that's in that role should keep that in mind as we move forward. So we're going to advance to our next polling question here. While you're responding, just want to give a friendly reminder that if you have any questions for Julien on ESG or other topics, feel free to submit those in the chat window in your browser. Okay, so are you currently exploring ways to measure and report your company's environmental and social impact? I'd venture to say we probably have a lot of folks who are at least a B here, but I will be curious at our results. We'll give everyone just a couple of more seconds here to respond. Just a few more seconds. Okay. Yeah, so it's actually split 50-50 between those who aren't considering it and those who are either actively seeking solutions or considering it for the future. And, I think that's great. Even if you're not considering it at this time, ESG is not going anywhere. So it's good to get more knowledgeable about this topic. All right, let's transition the conversation to current and pending regulations. Where are we with this now, Julien? What should our attendees know?
Yeah, so, and I think that's where, there's a certain degree of crystal ball time here, but thinking about it broadly in this country, regulations around sustainability reporting and disclosure are relatively few and far between. There are certain things at the state and local level around reporting for water quality issues and things like that people in certain industries obviously are very familiar with, as we were in the wine industry. But I think what is happening at the federal level is we're awaiting an update from the SEC. It's expected sometime this spring around climate and sustainability disclosures. They made a splash about a year or so ago, kind of starting to make some noise about developing some regulatory policy, and obviously that would be focused around publicly traded companies. In California, there were two pieces of legislation that were signed into law last October, focused around climate, financial risk, and greenhouse gas emissions reporting. Those were SBs 253 and 261. Those were not just defined to publicly held companies. They were also implicating larger companies, public or private, over a $500 million annual revenue threshold. There are regulatory requirements for sustainability reporting in Europe. So companies that sell to entities in Europe should be prepared for that. And I think broadly, and I think this gets back to the last polling question, around seeking solutions, is the urgency is, in my mind, I think it's growing and I think it's increasing, And what we're going to start to see, particularly in the middle market, is more of a trickle down effect as regulation and as that urgency to report starts to impact larger publicly traded organizations. They're going to be pushing that down to their scope 3 or their supply chain. And from our perspective, we help companies prepare for that type of reporting so that they're evaluating and they're measuring what matters, and they're starting to generate baselines and to collect information in that regard such that they're prepared. And then they're also able to integrate some of these industry or sector specific sustainability issues into their core of their DNA of their companies.
Yeah, and even if you're not a public company, right? A lot of these regulations start with the SEC and then go downward in other channels. So I'd say keep that in mind. And even if you're not in an environment, that's why it's always a good thing to be knowledgeable about what's changing there.
Yeah, we're doing a lot of awareness work right now with clients because, I mean, most of the clients that we serve are middle market, privately held companies. And so there's kind of two ways for them to approach sustainability at this point. It's really, getting their house in order, enhancing that awareness, being prepared to start fielding questions. We've seen it a lot. It's probably a lot more prevalent in like the consumer packaged good industry, food and beverage, where companies are selling directly to consumers and they're marketing on packaged, their publicly traded retailers are starting to ask those types of questions about, well, is it organic, and what kind of other sustainability features does your product or your company have? So we've seen a lot more, I think, early movement in that space. And then obviously the other space is really doing the hardcore business evaluation and really understanding what sustainability can bring from an ROI standpoint. So like at Jackson Family, where I was previously the head of sustainability, we invested from 2015 through 2022, we invested about $19 million in our sustainability initiatives, and it returned over 26 million. So there was a demonstrable ROI associated with things like energy efficiency and on-site renewable energy generation and emissions reductions activities, where we were able to actually demonstrate cost savings. And all of those ROI calculations did not take into account any additions for goodwill or any other kind of regulatory relief that we had gotten as a result of being transparent and engaging proactively with regulatory bodies as well.
All right. So we've gone over a lot for ESG, and I'm sure there's a lot of individuals who think this is great information, but they're wondering, where do I start and how do I get myself more educated? What would you say to them?
Yeah, I mean, we generally, we recommend companies do a sustainability readiness assessment or an ESG readiness assessment. And, that's a high level, pretty kind of, entryway to get a better understanding of what your industry and sector specific and company specific sustainability risks and opportunities are. We attune them to, helping the company essentially identify some of those different ISSB reporting standards. And we look specifically at what are the top 5 to 10 sustainability focused key performance indicators that you want to be measuring and reporting out on moving forward. And then we can kind of do some work with your data streams to ensure that you're collecting that relevant information in a way that is easily that aligns with your reporting structure. So doing that work, focusing on then leveraging kind of the recommendations in a high level assessment to focus on the near to medium term, next 12 to 24 months. What are some concrete things, some concrete investments, some concrete kind of policy changes that you can integrate or initiate into your company to actually make some real progress against some of those initial KPIs that you've identified? That's a really great way to start. We're seeing it with organizations across the board that are, starting to gain that level of awareness. One of the other things, obviously, that comes up for a lot of companies is doing a greenhouse gas emissions inventory, or baselining their carbon footprint. So understanding the climate impacts of their business and their associated supply chain activities. And, when you look at, some of the implications of some of the climate related legislation in California and in the EU in particular, and potentially at the SEC level, I think more and more companies are recognizing that they need to, that doing a baseline carbon inventory is also a good first step. What we saw in the wine industry was, by doing that baseline for us, it started to put things into context to where we got to see where the largest components of our carbon footprint were, and we could actually start to assign costs associated with that. And one of the big things that was like kind of an aha moment for us early on was recognizing the outsized impact that glass had in terms of driving our carbon footprint. So we when we did our baseline carbon inventory, our glass bottles represented about 20% of our total organizational carbon footprint. And we had never really thought about glass other than the fact that it's the preferred package for the wine industry. It's great for aging wine. It's infinitely recyclable. Consumers love it. All the things that you associate with glass. But we had never really thought about the carbon impact associated with it. And by seeing that and putting it into context, we were able to make a few small tweaks to kind of take some initial steps. We pulled some weight out of each individual glass bottle, so we reduced the weight. It's called lightweighting. And we were able to not only reduce the carbon footprint of our entire operation by about 5%, but we saved over $1 million in glass costs every year. And it was one of those win-win opportunities where we saved money, we reduced emissions, and the end consumer didn't even really notice it. So by doing a baseline carbon inventory, it's an example of where you can start to see carbon inefficiencies, and you can tie them to business efficiency.
Terrific. Well, let's go ahead and advance to a few questions from the audience before we conclude for today. First question, do you have any recommendations when vetting sustainability service providers?
Yeah, I mean, I think it's good to understand kind of how they approach due diligence. I think, I'm biased, but really understanding the company's core financials is an area where you can make recommendations, but you really have to understand what those impacts are going to be on the bottom line of the organization. And for us, like the more financial audit work that we do, the more we recognize that there is tremendous opportunity almost across all of our clients, right, for integrating sustainability, because we see in direct financial terms the impact of sustainability risks and opportunities.
Thanks, Julien. Well, we're just about at the conclusion of this webinar. Really want to thank you for your time. I know I learned a lot about ESG. I hope everyone did as well. You can find both Julien's contact information and my contact information here. We'd be happy to consult with you on any questions you have on ESG or other topics. Julien, any closing thoughts in the last 30 seconds we have here? How would you summarize what we learned today in 15 seconds?
I think the time for inaction has passed, and I think that companies are really well served to get a high level awareness at a start, at a bare minimum, of where their sustainability risks and opportunities are, because again, sustainability risk is financial risk to the business.
That's a great way to conclude our event. Take care. Hope everyone has a great rest of your day, and thank you for attending our Executive Insight session.